Thanks, Christy. And also thanks Nick, Paul, Sharon and team. 21 years, wow. I missed the first 7, but I've enjoyed the last 14. But no, thanks for putting on the conference and letting Develop talk today. There's 2 things I like coming and getting out of the Gold Coast conference. And point 1 is obviously catching up with all you folk here, my shareholders, long-time shareholders that have made a lot of money out of myself and the team and what we've created over the journey. And the second part, I'm like you, I'm looking for the 5 or 10 bagger. Who is the 5 or 10 bagger for this year? We got it off Spartan last year. Simon's in the room. Thank you, Simon. That was a very, very good talk that I got to see last year and bought some of the stock, and we're all celebrating. So hopefully we can spot that next 5 or 10 bagger. And I was trying to look around earlier on in the break who that next 5 or 10 bagger would be, and then I got to my booth. I went, it's here. And how do you get that 5 or 10 bagger? It doesn't matter what stock you're in, you've got to have a pathway to cash flow. If you can demonstrate to the market a pathway to cash flow, like a Spartan is, with some amazing drill results, you will be the next 5 or 10 bagger. So hopefully I'll take you through the story of how we're going to be that next 5 or 10 bagger. Very important. So look, we've been very, very busy. We only put our 5-year business plan out a little over 2 years ago, and we're ticking the boxes really quickly. I'm not going around the world and telling people how great we are or going to brokers and bankers in East Coast or West Coast. We're actually just busy building a business. But we're ticking off the workshop and the strategy and the 5-year business plan very quickly. You can see these boxes here. There's 5 key pillars. We're not deviating from what we're doing. Our world-class capability, operating, tech services, management's done. We've got 400 people in the business now. This time next year, I'll have 750. We don't advertise. Turnover's less than 3%. We will be one of the most socially responsible companies on the ASX. We don't have to retrofit. We're a blank canvas company. We embed this stuff from day dot. We've got our guidance out there. We'll do in excess of 50,000 tonne of copper per annum in a couple of years' time and 200,000 tonne of spodumene. And our mining services division is built. I only wanted 2 or 3 contracts. I've now got 3. I've got some amazing clients, amazing projects, and we've got great visibility across that business, and I'll talk about that a little bit later on. I have to do a big shout out to my team. Anyone that's ever worked with us or my team in the past, your people are your #1 asset, regardless whether it's resources, materials, whatever, except tech. There are no people in that game. Fake businesses. But I have a big shout out to my team. A lot of people have jumped on board to Develop. We've only been around 2 years. We had 6 people this time 2 years ago. So now 400. They've got out of secure, stable, long-term, experienced companies that they've been with their careers to jump on. Amazing shout out. And they're the ones that are doing the heavy lifting out in the field. So big, big thank you to my team. These are our 4 assets in our business, and we're in Australia. I love doing business in Australia. Look, Dave's got more hits than the Beatles with silver there in that previous presentation. That's great. I like Australia. I think you can make a lot of money. We've proved that in the gold sector. Now we're going to prove it in the critical mineral space. So you don't have to worry about waking up and I'm in Africa or you don't have an asset, and I don't know. I just don't invest in Africa. That's just me. You just don't know if you've got ownership of your mine. So our key assets, and I'll bring this back to maybe a gold theme, and I know there's a few analysts in the room. I did spot a few people that need to cover me as well, but please, I'll put this in a bit of, gold terms. But Woodlawn, that's our first mine. It's an annual copper equivalent around about 20,000 tonne of copper per annum, and in gold terms, it's around about 100,000 ounce gold mine. Our Sulphur Springs is about a 30,000 copper equivalent mine per annum when we get that up and running, so it's about 150,000 ounces. And Pioneer Dome, lithium, right now is equivalent of about 20,000 tonne per annum copper mine. Again, 100,000 ounces per annum, but go back 12 months ago, lithium price, that was equivalent of about a 75,000 tonne copper mine, which is about a 350,000 gold per annum gold mine. So added up, it's about 600,000 ounce per annum producer, which, if I was doing that, we wouldn't be a 500 mil market cap. And the 4th key pillar of our asset base is our mining services division. Really, really important. Got 3 key contracts. We will grow with those clients. We will service them. We're not interested in getting other work, to be honest. It is hard work being a mining service provider, but for culture, capability and cash flow, very, very important piece to our business. And I think there's a little bit of upside in, I guess, our mining services revenue. These numbers were put out before Bellevue raised their money and are going to expand their mine. And I know Darren's in the room, but we are one of the biggest beneficiaries of that raise. So well done on doing that and growing the business. And we're really happy to partner with their growth as they continue. So I think there's upside to that. I'll put an MPV there of question mark, question mark. This is an amazing business. In 3 or 4 years' time, we'll be turning over probably close to $400 to $500 million per annum in our mining service division. And if you do this right, you get the productivities right, you get really good people, and mine correct and give a great result to your clients so they do well, you can make really good margins in here. So very important part. Got a great balance sheet. We finished June with $41 million in the bank. I've got another further 10.5 to put in myself by mid next year. We've got a bit of equipment finance, which is covered by our contracts. We basically have a fixed and variable contract, so our clients pay for that capital. We've got a fair bit of undrawn facilities to cater for our growth. We've been really well supported by the global OEMs, the Sandviks, Caterpillars and Epirocks of the world, and also the big Australian banks. We've been getting amazing terms off them and facilities for our equipment finance. I've got no drawn corporate debt facilities at this stage. Our Woodlawn funding process is nearing completion. We had very strong participation through that process. It's extraordinary, even though it's a small mine, we got a lot of amazing proposals on finance and offtake. We have selected Trafigura, and I'll come to that, but our final documentation is expected to be announced in this quarter. We have commenced a strategic asset level investment process that's underway. I did flag that we might sell up to 20% of this asset, Woodlawn in particular. We're only going to a small number of parties, but that's underway, and there's a lot of interest on that. And we've got a hell of a lot of tax losses. We'll put our accounts later on this month. Expect those tax losses to grow. That gives us an amazing tax shield as we start generating cash flow mid next year, and that's great because we all hate the ATO. Just quickly recap. This is obviously quite a focused presentation on Woodlawn because it's our number one asset we're kicking off. A little bit of background just to rehash. We bought it for $100 million. We inherited a company that had spent $340 million of capex into an asset and went broke in commissioning. We've spent $60 million on top of that to de-risk this mine. I get queried a lot, oh, you're going to raise money? I'm like, no. 340 plus 60, there's 400 equity that's already gone in this asset. It's done. The equity component was done previous, so sorry any brokers or bankers in the room, you're not getting a ticket out of me. What we've done for that 60 mil of your hard-earned money and my hard-earned money is we grew the resources on this project since I last seen you 12 months ago by 55%. We only did 50,000 metres. Imagine when we get mining and when we've got more money and we can throw some money exploration, like we're going to do some serious damage on the resource and reserve front. We grew reserves by 94%. We developed the mine, underground mine. I have the first 2 years of production fully developed. It's done. That's not a bottleneck. Anyone that's built a mine, quite often the mining's a bottleneck. We are ready to go. We've delivered a 10-year mine plan, and I'll talk about my restart strategy value in a minute. Now, Trafigura, we did an amazing deal with Trafis. Big thank you to them. They worked with us on this, but we've got a 100 mil loan facility to bring Woodlawn back in production, and it's amazing terms, cheaper than most home loans in Australia. So 2% plus bank swap rate, which is extraordinary. Anyone that's financed resources, I can't tell you that rate in the industry is way better than most gold miners are getting. So again, it's a quality of the project, the quality of the team, and how we've de-risked it is how we got such fantastic terms. With that, we didn't have to sell our soul. Anyone that's been in the base metal space, you normally take in one hand and give it another. We got amazing offtake terms from Trafi, and we did a 5-year offtake, and those terms were that good it improved our MPV of our restart plan by $80 million, and our free cash flow at the start by a substantial amount. I won't go into the key terms. You can look at them in your leisure. Why are Trafis important? Because they're the biggest commodity trader in base metals, second in oil and gas, but the biggest in base metals, which is what we're going to be mining. You know, small little balance sheet. They turn over $250 billion last calendar year, US. They've got $75 billion US of credit lines. They own they control 65% of all concentrate metals in Australia. Most mines you've heard about here, base metals, they've got life of mine or they've got off-take and debt on. We think that's an important relationship in the future. They are the big people, they know where the metal's going, they give you great visibility of what's happening, and they're very bullish on zinc, actually ultra bullish on zinc and bullish on copper. So we're going to be doing copper, zinc, lead and precious. Don't forget, I will produce a little bit of gold out of Woodlawn, so I can still say I'm a gold miner. But look, really good relationship, very important relationship, because that will feed other opportunities to fund Pioneer Dome, Sulphur Springs, and obviously as we get bigger, we'll go and buy other stuff. And I think these are a critical partner for us. So look, we updated our restart strategy last month. Our MPV grew 11% to $728 million. Free cash flow of that project, 1.1 bill. And I did like for like from my April announcement to last month. I didn't change commodity prices, even though they're up 10%. I want to do like for like. So you throw in an updated price deck in this, and MPV goes well north of 728. CapEx is up 11 mil to 78. Very fundable. We've got 100 mil. We've got cash of 41. The cash balance will grow when this gets to the bottom of the J curve. And we've got a fair bit of facility, overrunning that 100 to what the actual CapEx is. So sorry again to bankers and brokers, but we're fully funded. This is the money shot. This is our pathway to cash flow. And this is why we've been very busy, not bloody saying how good we are or doing presentations all around the world, is we're literally just building this business, because if we execute this, we're going to have operational free cash flow of $500 million a year. Only way I make money out of this is cash flow, and then cash flow equals dividends, because I'm not a seller. And some of you guys might want to sell, but I'm in this for the long haul, and the only way I make money is cash flow and dividends. So this is what is up on our whiteboards across our company. This is what everyone internally has been working for the last 2 years. But we deliver this. It's pretty simple maths. Add back a DAR on top of it, and maybe it's a 200 or 250 DAR onto it. Then all of a sudden we've got a $750 million EBITDA per annum. You're going to give me a 4 or 8 times multiple. 4 if I'm a really bad operator, 8 if I'm good, 12 if I'm Oz Minerals, and an amazing company took them out. But it's really simple maths, and there's no more shares on issue. So that is the money shot. And you can see how bloody cheap we are. Thank you very much.